Hello, family. Hello, YouTube. I hope everyone is doing well. Already know this channel is dedicated into making your trading journey very, very easy, and we are interested in providing you with the knowledge you need to be able to make money from the market. Like I've been saying in my previous videos, anytime you watch my videos, make sure you gain that understanding. After gaining that understanding, go on your MetaTrader and practice everything that I am saying. Then you make sure you make money from it. So the end product, or the main reason why you need to subscribe, or the main reason why you will have to even pay attention to my videos, is that you are gaining knowledge to make money. You're not gaining knowledge for just gaining sake, but after gaining knowledge, your focus is that you're going to make money with the knowledge. Now, in my years of trading Deriv and in months of giving signals and mentoring people, there are two solid patterns that if you understand and if you can identify them, it's going to change your trading life, forever. And I'm going to share the first one with you. And the first chart pattern that if you understand, or if you're able to identify with the rib, is head and shoulders. Head and shoulders. So let's say today is your first time listening to me and you haven't heard about chart patterns before, or you don't have any idea about what chart patterns are. Then what I'm going to ask you to do is that, first of all, go on YouTube, any YouTube channel, just search chart patterns and gain the basic or foundational idea or understanding about chart patterns. When you are done, then you come to continue this video. You see, one thing I want us to really pay attention to is that this channel is mainly and strictly for Deriv traders. That's people who trade the synthetic market. This is what this channel is mainly about, because one thing I can beat my chest and say that I know how to do and I've mastered is trading the synthetic market. And if you are to scroll down and go through my videos, you can see that I'm taking $5 to $27. I'm taking $5 to $20, $1 to $6, $1 to $8, $1 to $10. Why? Because Deriv is something that I really, really understand, and I know my left and right about it when it comes to the synthetic market. So everything that I teach you is how the Deriv market is. So, for example, you see, in Forex, there are general ideas that run through the crypto market, that run to the Forex market, that run to the synthetic market, that run to the fundamental, that run to the futures markets. Now, despite this, there are some knowledge that are specific to crypto. They are knowledge that are specific to Forex. I get him. So there is the way the Forex, the candlesticks, that's the way the crypto market behaves, the way the currency pair market behaves, the way the synthetic market behaves, and the way the futures market behaves. They are not the same. So, for example, if you go on YouTube and you search on chart patterns, they are going to give the generalized way of trading chart patterns. But truth be told, if you come to Deriv, even though you are going to see head and shoulders, you may not see it in the way that a currency pair trader is going to teach you. Are you getting it? So let's say if you are to search head and shoulders and understand it for currency pairs, if you go to the synthetic market, it's going to be the same head and shoulders, but there are going to be a slight difference about it. And that's why this channel is here. So if you are someone who trades the synthetic market, you trade Deriv, then this channel is your number one solution. So let's just move on. So like I was saying, there are two powerful chart patterns that you need to pay attention to. If you don't know what chart patterns are, go to other YouTube videos, get the basic idea. When you are done, then you come here. So the first chart pattern I'm going to talk about is head and shoulder. Now, this is how a head and shoulder looks like. With the head and shoulder, we have this. We have the left shoulder, we have the head, and we have the right shoulder. Now, there are two types. There is a head and shoulder that indicates that sellers are in power, and there is a head and shoulder that indicates that buyers are in power. So this is the head and shoulder that indicates that sellers are in power. So anytime you see this head and shoulder, it means the market is about to sell. And there is the next one, which is called the inverted head and shoulder. So this is the left shoulder, this is the right, this is the head, and this is the right shoulder. And this indicates that buyers are in power. Now, what I'm going to do in this video is I'm not going to give you the basic ideas. Like I've been saying, this video is mainly focused on providing you knowledge that will produce money. After watching this video, you need to and getting understand, you can start making money from the market like crazy. So that's the purpose of this channel. We don't post things to waste your time. When anything we post, if you are to get the understanding, you can make serious amount of money with it. So let's move on to trading head and shoulders. So how do we trade head and shoulders? Now, in trading head and shoulders, we don't just trade it blindly. What we do is that we mix head and shoulders with charts. Sorry, we mix head and shoulders with market structure. Now, if you are to go to my previous video, you can see that I have showed you how to map your market structure, right? How to know your lower highs and higher lows, your lower lows and lower highs. I've already showed you guys how to do them. So that's the foundation for trading head and shoulders. Now, there are actually two types, type 1 and type 2. And by the end of this video, you're going to really get what I'm saying. So we want to trade head and shoulders. How do we trade head and shoulders? First thing is that when you see a head and shoulder, it mostly comes when there's going to be a change in trend. When there's going to be a change in trend. When the trend is about to change, that's when. And what I'm saying is in relation to the synthetic market. Mostly, anytime you see head and shoulder, market changes its strength. That's for Deriv. So this is how we go about it. So let's say if market is in a downtrend, as we already know, when market is in a downtrend, we form lower highs and lower lows, right? I've already taught you that. Now, in forming lower highs and lower lows, we understand that when market comes to break a lower high, what do we have? We have a change of trend. It means the trend has changed. Now, this is the key to trading head and shoulders. What you do is that, and this is the type 1. So with this way of trading head and shoulders, what you do is that you identify your lower high, right? Wait for market to break it. The moment market breaks it, you come to your left side. So this is going to be your left shoulder. You draw a rectangle here. Now, the moment you draw a rectangle, all you are waiting for is that market comes back to this rectangle. The moment market comes back to this rectangle, you enter a buy. With your stop loss just here and your TP here, and you hold for market to hit this TP. This is how you trade a head and shoulder. So this is the inverted head and shoulder. Now let's look at it for yourself. Now let's say market is in an uptrend like this, right? So you have higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So you just draw your line to wait for market to break this. The moment market breaks this, what do? You draw your rectangle here. You draw your rectangle here. You wait for market to come all the way up. The moment market comes here, you get your sell here, your SL is here, and your TP is here. Then you wait for market to hit it. Then your head and shoulder is formed. So with this strategy, what we do is that we actually trade the right shoulder. We trade the right shoulder. That's what we actually trade on. And we mix it with market structure to give us higher winning probability. So this is how to trade the type 1. Now let's look at how to trade the type 2. Now with the type 2, let's say market is going down, right? Market is going down like this, right? And now let's say with this one, instead of market forming just a higher low, it comes, let me just clear it and draw it again. So let's say market is going down like this, right? So with the, let's say before market form this higher low, it does this little, oh, I am mine not. So let's look at this. Let's say higher low, right? It's forming, it does this, right? So let's say market is in a downtrend like this, higher low, lower high. So this is the type 2, right? So let's say market is in a downtrend. Now, instead of forming a higher lower high like this, market comes before it forms, gives a reaction here, it goes down. So with this, we have a peak here. So with time two, what you do is that you rather, instead of wait for market to break this main lower high, you rather put a line here, right? So if market is to come up and break this lower high, this mini zone here, you draw your rectangle here, right? Your zone here, then you wait for markets to come down. When market comes down, you enter here and your TP is here. Then market buys up. This is how you trade it. Now let's look at it in the buy direction. So let's look at it in the buy direction. Say have something like this, right? So before market came here, it did this, right? So same way, draw your line here, wait for markets to break this. Then when market breaks this, you draw your rectangle here. Then what's next? Wait for markets to come here. And when market comes here, you get in a sell and market sells with your TP here with the SL here. Now, without wasting my time, let's just go to the chart and let me show you guys how to see it on the chart. Let me show you how we can trade using the type 1. So if you are to come here, right? You have to come here, you can see that higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then we have a mini structure here. So this is actually type 2, right? Yeah, this is a type 2, a higher low. So with this, all you are waiting for is the market comes to break. Market comes to break this zone. Remember the main higher low is actually this one. The main higher low is actually this one right here. Now, do you know what? According to type 2, if market breaks this mini higher low, then all we do is that we come here, or even come here, then we draw our rectangle. So all we are waiting for is a market after breaking it. If market after breaking this was to come here, we would have gotten a sell entry here and enter with our TP here. But do you know what happened? This one, it didn't, after breaking it, actually went down here to also break this one. So we are still in play. So all we are waiting for is a market will come up. All we are waiting for is a market will come back here. Then we get a sell entry. So let's see what happened. All right, so market came here. So the moment market gets to this zone, right, all you do is that you enter a sell, the stop loss above this rectangle here, and your TP all the way down here. The TP is here. So let's see what happened. As you can see, market just came to hit the TP, and we have the head and shoulder like this. Are you seeing the head and shoulder? This is the head and shoulder. We have the head and shoulder like this. This is how it is. So you are not going to see it beautifully as how like I was using the lines to explain on the whiteboard. So let's look at another example. So if we are to come here, what do we see here? If we are to come here, I'm going to see, let's see. Okay. Let's come here. I'm going to see higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher high. So this is type 1. So what happened? Market came down, broke this higher low over here. So the minute market breaks it, all you have to do is that you come here, you extend this from here, then you wait for markets to come and hit it. So the moment all this place, wait for market to come and hit it, and as you can see, market came. The moment it comes, enter your sell entry here, then stop loss here, TP down here. You can see market selling beautifully. You can see market selling beautifully. Let's look at another example from a different asset and see how it goes. So let's look at, let's say, verse 10. Verse 10 one is, that's one of my favorites. So all you have to do personally is that just be practicing this strategy. So let's see if we can get an okay. So you see how I've been practicing. Can see I've already marked things down. So let me explain it to you guys. So we have what? Zoom in and we have market playing out, right? So there's lower high, lower low, lower high, lower low, lower high, lower low, lower high. Can make this a lower low, lower high, and lower low, oh, and a lower low over there, right? And a lower low here. There's it. Lower high and a lower low over here. So all that we are waiting for is that we are waiting for markets to break this. We are waiting for markets to break this. When market breaks this one, what do? We put our rectangle, we extend it here. The moment market comes here, what do? That's right, we get our buy entry here with our stop loss here and our TP here. But with this, with our TP here, we get our stop loss. We put our stop loss here, then our TP over there. Then this is what happens. Then we extend it. So we put our stop loss here and our TP over there. And as you can see, market came all the way up. So what you do is that you extend the rectangle and you just put your stop loss here, TP here, and what happened? You can see market came all the way, hit our TP, and market kept on buying. Market kept on buying. Let's see if we can get another example here. All right, so let's look at, I think, one last one then. All right, so this is beautiful. So let's look at this one and see. So if I'm even to start, let's focus on this one, then I'll go to the one down there. So if I'm to start from here, you can see that we have higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And what happened? We are waiting for markets to break. So market came here and broke it over here, right? If I'm scrolling, can see that market came and broke it. Then when market breaks it, what do? Come here, you draw your zone over here. So all you are waiting for is the market will come here, then you get your sell entry and you trade it down. So let's see what happened. So you will just be waiting for market to come here with your stop loss somewhere here. Let's see. Okay, so with this, so this is one of the issues I'm going to talk about in my next video. See, it didn't exactly come here, but we could have still got it. But this is the general idea if I'm to bring. Didn't really come to our zone, so we would have missed this trade, even though it followed the criteria. Let's look at this one too. Let's look at, okay, I'm seeing a head and shoulder here. So let's look at an example of this one too. Right, higher high, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay, so this is actually type 2. Okay, let me just zoom out so I'll be able to map it well. So lower high, lower low, lower high, lower low, lower high, lower low. Then market created something here. So this is actually type 2. So market came here. Now The moment market comes here, what are you waiting for? We are waiting the market comes, break this. The moment market breaks this, you extend your zone over here, then you wait for market to mitigate your zone and you enter a buy signal here. You enter a buy signal here with your stop loss just below NOTB over here. You can see market just went all the way up. I see market went all the way up. So guys, I've showed you 3 to 4 examples about how this strategy works. Remember, this is trading view Deriv and it doesn't have any option for bar replay. That's why I'm unable to do the bar replay to really explain it for you guys to get a concept. But with the little I've done, at least the idea is you're going to have the general idea of what I am saying. Now, what I want you to do is that after watching this video, watch it at least 2 or 3 times to make sure you understand. If after watching it once you get the understand, that's cool. Open your trade, begin to spot where head and shoulders are and try and see if it followed what I have taught you now. Open different assets for volatilities. Just do it. Try and see if it followed the same path. If it followed it, then what you need to do is that you start with demo, practicing it, then you become perfect with it. Of course, if you are listening to me and you want me as your mentor, you want me to be your lifetime mentor, to be your coach, maybe after watching my video, you want to send me a DM to get my attention for me to start Zoom calls with you, teach you my strategy from scratch. It's just $60 for a lifetime. After doing that, we are logged in. And one thing about my mentorship is that even after subscribing for a lifetime mentorship, I give you 1 month of free signals. So after teaching you the strategies, I make sure we spend 1 month and we make money with the strategy. That's how serious I am with this work that I am doing. Of course, if you are listening to me and let's say, unfortunately, you are not having $60 to come for mentorship, listen, as long as you have subscribed to my YouTube channel, you are my student, I am your teacher, and you are my teacher, and I am your student. As long as you are subscribed to my YouTube channel, we are a big family. So keep on consuming these free assets, free knowledge, and build upon it. One day you'll be able to scale up, make enough profits, come to mentorship, and make huge amount of money. Until then, this is Trade with Nana. Don't forget to like, comment, subscribe, and share my videos. If you want to get in contact with me concerning the mentorship and concerning any service at all, you can contact me on Telegram at with Nana 6. Trade with Nana 6. Let me see. You can contact me on Telegram at Trade with Nana 6, Instagram at Trade with Nana, Twitter at Trade with Nana, and I'll be excited to respond all your messages. Let me know if you have any question, if you understood what I am teaching.